All right, everyone. So welcome to the basic market structure 2.0 video. I had to remake my original market structure video. I just wasn't happy with it. So I'm hoping that with this, you'll be able to learn basic market structure the most optimal and efficient way possible. So with that being said, let's begin. All right, so first and foremost, we have to start with candle anatomy. You have to be able to know what it is that you're looking at when it comes to each one of these candles. So here we have a bearish candle and here we have a bullish candle, right? So this bearish candle, price opens on the top part, okay? Why is it a bearish candle? Because price is going down. And why is this a bullish candle? Because price is going up, okay? So the opening price for a bearish candle is here. This is the highest point of this candle. This is the body of it. This is where price will typically close. Okay, so once this bearish candle is done forming, the bottom part of this bearish candle, or of any bearish candle, will be here. And then here is the lowest point of that bearish candle. Now, when it comes to range, right, you see opening range, low of the range. Don't worry about that. You'll get into more advanced stuff later on. But for now, all you have to know is the most basic anatomy of these candlesticks. Now, price usually, well, not usually, always opens from the bottom here. Okay, it will always open from the bottom of a bullish candle, right? So here is the body. This whole thing right here is the body. This is the close. This is where price will always close in a bullish candle. It will always close on top. And then here's the high of the candle, right? So what these wicks really represent is essentially like footprints, right? So at some point, price was going up here, and then this was the highest point that price reached. And then at some point, price was going down here. It was retracing here, going down. And then at some point, went back up, right? And then finally ended up closing here, okay? That's how price is read when it comes to each one of these individual candles. I hope that wasn't confusing, but if it was, please let me know down in the comments or join the Discord. It's free. I'm not charging anyone for it, and ask me questions there as well. All right, so let's start with some very basic stuff here. A swing high is a price point on a chart where the price reaches a peak and then begins to decline. It's characterized by a high that is higher than the highs to its left and right, typically formed by 3 candlesticks, with the middle candlestick having the highest high. Now, I will show you some live examples, don't worry, but for now, I just want to keep it very basic. A swing low is a price point where the price reaches a trough and then begins to rise. It's characterized by a low that is lower than the lows to its left and right, typically formed by 3 candlesticks, with the middle candlestick having the lowest low. Now, when price is going down, it forms a swing low, and then when price is going up, it forms a swing high. So here's one swing high, here's a swing low, and swing high here, and then swing low here, swing high here, and then swing low here. Now, typically, what a lot of mentors or other people label them as or call them, depending on what the market's looking like. If the market is bullish, they'll say a higher high here, a lower high here, higher high here, and then if price doesn't break past this low, it'll also be called a lower high here. Now, when looking at it from a bearish perspective, this would be a lower low, this would be a lower high, and then this part here would be a lower low again, right? So that is how you can also look at market, and you will hear a lot of other traders typically look at price like this. Now, another thing to keep in mind is swing highs and swing lows are usually the highest parts or the overall part of the market. And now you'll see what I mean in just a little bit, but typically swing lows and swing highs are generally the highest and lowest points of the current market structure that you're seeing, okay? All right, so let's talk about internal structure. This refers to the price action patterns and movements that occur within large market structures or trends. It's usually characterized by smaller time frame price movements or smaller moves in general that may differ from the overall trend visible on higher time frames. Now, this doesn't have to specifically apply again from smaller to higher time frames. This can also apply to the current market or time that you're looking at it through. So you'll sometimes see some smaller highs and smaller lows, also known as fractals at times. be formed between the major highs and the major lows. That is what is typically referred to as internal structure. Now, once you get more advanced or start going through most of my videos, especially if you're on the beginners to advanced playlist, you'll realize that I actually have another way of classifying this type of structure because it's a little easier that way. But just keep in mind that yes, just as there is overall structure, like the swing highs and swing lows, there's also smaller or internal structure that happens in between these areas. Alright, so now let's talk about break of structure. In an uptrend, a bullish break of structure occurs when the price creates a higher high without first making a lower low. In a downtrend, a bearish break of structure happens when the price forms a lower low without first creating a higher high. It often indicates the continuation or beginning of a trend. Now here, you can see that price breaks through this previous high here, and then after price breaks through it, it finishes forming its higher high or simply a high, and then comes down and then makes a low, right? Typically, that's what it would usually do. But again, we'll get into a little bit more advanced stuff later on. And then here you can see price break structure here, right? Price is coming down, break structure, comes down, finishes building up its structure, pulls back, creates what's known as a pullback, and we'll talk about that in a little bit. But what you can basically see here and understand is that price is essentially breaking through previous lows or previous highs. That is what's known as a break of structure, and this happens on any time frame, on any trend. Now, I wanted to mention this because it's very important. Now, first thing is here you can see that this is a high, right? Because you can count 1, 2, 3, and from here, this candle in the middle with its wick, including the wick, because I like to mark them up with wicks, I consider this as a high. And here, as you can see, from the lowest point, it's marked out by this wick right here in the middle, or by this candle. And as you can see, this is where the low was marked out. Now, this is considered to be a risky break of structure. The reason why it's risky is because you are using the wick of the candle as your confirmation for a break of structure, as opposed as if you would have been more conservative, because in this case you are using the body of a candle to assure yourself that this is a break of structure. Now, what would give even more confirmation if more strong candles keep forming instead of these like very small wicky candles, right? The bigger these candles are that break through these highs or lows, the better. So I hope that kind of clears this part up a little bit. And if you do have any questions on this, please do let me know in the comments or in the Discord. Okay, so let's talk about a change of character. Some people also know these as market structure shifts, by the way. So definition: change of character signifies the initial shift in order flow with financial markets, indicating a change in market sentiment from bullish to bearish or vice versa. Structure: in an uptrend, a bearish change of character occurs when price breaks below the most recent low. In a downtrend, a bullish change of character forms when price breaks above the previous high. Market dynamics: it often occurs when a minor demand or supply zone, or you can also look at it as low/high, fails to hold, suggesting a potential shift in market trend. Now, timeframes. Changes of character can be observed across various time frames, or really any time frame, from major shifts on higher time frames to short-term changes in order flow on lower time frames. Now, trading application: traders use change of character to identify potential trend reversals, entry points, and opportunities to trade against the existing trend. But please don't do this unless you're advanced or actually know what you're doing. It's better to just change with the trend, especially if you're a beginner. Confirmation: a high quality change of character often involves a double zone breakout, where price breaks through two successive supply or demand zones, or you can look at it as lows/highs, right? We'll get into supply and demand zones later down in the playlist. So here you can see that trend first started giving us signs of a change by the first break of this low. What does price do? Come back up, create a pullback, then goes down, creates a break of structure here. This is the second set of structure that's being broken, and then that would confirm with a higher probability that the trend is now officially changing. Guys, I need you to understand this. There is nothing 100% certain in anything that we do or in anything that we analyze. We operate on probabilities. it is a high probability that the trend is now shifting from bullish to bearish. Why? Because we're using things like this. We're watching changes of character, we're watching our breaks of structure, and we're trying to use these things as confluences to say, okay, I think that the trend is now going to shift because it's doing this and that and the other, right? Now, same thing here. Price is breaking structure here, which is known as our change of character, but it is officially confirmed by the second break of structure, right? When price broke here, okay? So hopefully that clears that part up. Okay, so let's talk about a pullback. A pullback is a short-term counter movement within the prevailing trend. It's considered temporary and does not indicate a trend reversal. Pullbacks are seen as healthy corrections in the market. So I marked it up a little bit more easier for you guys. So typically before a break of structure and after, you have what's known as a pullback. So price comes down, right? Sort of stops a little bit here, sometimes even consolidates, goes back up, creates a little bit of a break of structure, right? Finishes forming, comes back down. This is what's known as the pullback. So again, settles somewhere around the 50% level of the trend. You can use something called a Fibonacci tool. I'll show you that in a little bit. But yeah, typically pullbacks are nothing crazy. Sometimes they are a little deeper. Sometimes they'll be down here. Sometimes it's sweeping liquidity, but we'll get into that a little later down in the further videos. But it typically does not cause changes of character. The moment it does cause changes of character, you have to be very careful. But yeah, pullbacks are very simple to spot. Okay, so it goes from high, low, high, low, high. Okay, and that's another thing. So pullbacks, depending on the type of trend that you're looking at, you can also label them as lower lows, higher highs, so on and so forth. So like I was showing you guys here, we have A being the higher high, B being the lower low, or also known as a pullback in an uptrend, right? So again, higher high, lower low, and on a downtrend, you have your lower low, and then B would be your higher high, but in this scenario, it would be the pullback, because again, we're in a downtrend. And same thing repeats here. Now, I didn't want to leave you guys in the dark completely when it comes to liquidity. So liquidity, essentially any structure that gets taken out by another high or low. This applies to major and minor structure as well. So here are the fractal highs that I was talking to you guys about. So the more internal highs that you'll see. But yeah, so liquidity will usually be here or here, depending on the type of structure that you're looking at. So if you're in a bullish structure, liquidity is typically down here, right? But if you're in a bearish set of structure, then liquidity would be like this right here, right? These little areas. This would be considered liquidity. And liquidity can be used as fuel for the market. So in the future, we'll be talking about more on order blocks and supply and demand zones. But typically, what price will do is it'll sweep some liquidity or these lows or highs. And in this example, we're going to be talking about the lows, right? It sweeps some lows here, 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 comes down. Once it sweeps enough liquidity, including here, price will then say, okay, I'm good. I got enough fuel. I'm going to tap into this order block or supply and demand zone and then head back in the original direction. All right. Now, you might not understand liquidity completely, but like I said, if you watch the rest of this playlist, I promise you'll understand liquidity very, very efficiently. But like I said, essentially any high or low can be looked at and considered to be liquidity as well when it comes to looking for fuel in the market. Alright, so a little pro tip that I thought I should add. This is from the old basic market structure video that I had. I thought I would recycle it just for old time's sake. So here you can see price started to have a change of character, right? Price goes down, creates a low, comes back up, creates a pullback, comes back down, causes a break of structure here. And then as you can see, price kind of consolidates or moves sideways a little bit, creating liquidity. Price comes up, takes out this liquidity, uses it as fuel, taps into this area right here, this point of interest, and then price rejects off of it where you could have entered for a trade and you could have set your take profit anywhere down here, and price eventually touches take profit. Now, why would I enter from here? Well, when price created this break of structure, this high should in theory now be a high of protection. Price should not go past this new high that was created here, okay, or this lower high. So if you are trading counter trend trading, this would be one way to do it, okay? So make sure you look for that break of structure, or that second break of structure, because you had one here, right? You had a change of character or your first break of structure, then you look for the second one, and now this new high or lower high or pullback should now be an area that should be considered an area of protection. Pretty easy, pretty simple. Okay, so I'm going to show you a quick example on how you can mark up your structure in the most basic way that I've just shown you throughout the presentation. So here, if you want, you can start off by marking up the highest points that you see. We're going to try marking up like the most major set of structure that we can find. So here's one point, here's another, and I'm using a software called TradingView, by the way, for those of you wondering, and we'll put it right up here. Okay, this is now considered major structure or the overall market structure. So we have 1, 2, and 3, right? And then we have price going down, creating a pullback. But overall, as you can see, we are obviously pretty bullish. Okay, we're pretty bullish. Now here we can mark up our internal or minor structure, which is basically this little stuff right here, right? That's one. That would be the second breakup structure. This one right here. Let's see, this one here as well. Okay, so we have little breaks of structure there. And as you can see, we also have our very small minor pullbacks. So as you can see, we have those right here, these little pullbacks here, this one right here, and yeah. Now we can mark up our change of character because this one right here, this right here. Notice how I did not use the wick for this one. I used this candle for my confirmation of the change of character. Now you can use wicks like I said before, but for me I just like using candles. And then what did price do? After it created a break of structure, created a pullback here or an internal pullback, and then we have another break of structure confirming the change in trend. And as you can see, all you would have to do is just rinse and repeat, rinse and repeat. It's that simple, guys. You don't have to do anything crazy. It's not that hard. Real basic stuff. And there's also an indicator that I will link down below that can help mark these things out. It'll look a little different as if you were to do it yourself. So I don't recommend relying too heavily on this indicator, but it helps out by marking these little areas. Okay, and you can also mess with it. It's got a bunch of other stuff here that you guys can do. So you can show swing points, you can show strong, weak areas. Like these are just the major swing points, right, that we were talking about here. All right, so let's move on. Okay, so I wanted to add this little bonus on how to use the Fibonacci tool. Now, I wanted to do it on the Apple stock, even though I don't really trade stocks. I'm not a big fan of trading stocks, but I just wanted to show you that all my methods, all these teachings really do apply on everything and anything. So you'll typically find this tool here in this side of your TradingView chart, and you'll look for something called Fib retracement. Now, when you get it, it should look something like this. Okay, something like this. And if it doesn't give you the same settings, just copy mine right here. Okay, pause the video if you have to, and just copy all of this stuff. Okay, now what the Fib tool will do is it gives you areas of price prediction. And what I mean is price typically retraces and goes into these very specific levels. These are mathematical sequences. If you want to know more in depth about this type of tool, I will link a video down in the description below. It's got a lot of good stuff, really good stuff in that video. I highly suggest you check these guys out. I believe it's from Fractal Flow, so keep an eye out for that in the description. But anyways, you can essentially link it from your recent low to a recent high, which would be right here, and then you could just drag it out, right? And as you can see, price retraced into one of these levels. And what did it do? Bounce off, come back up, almost tapped into the 1.618, came back down, retraced back near this level, went out again, and then retraced into this one. Notice how it's almost perfect when price retraces into these areas. That's what the Fib tool is really used for finding areas of retracement and areas of further expansion when price expands towards the upside or downside. And I'll even show you here in this example, right? So let's see here. I'm gonna reverse the Fib for you guys. So we're gonna go from this high to this low. Okay, and as you can see, look where price basically stopped and started consolidating right near the 2.618 area. Now there's a lot more when it comes to trading with the Fibonacci tool, but this is just a small quick introduction to it. There's so many other settings that I use. I mean, like, look at all my templates. Okay, I have a lot of stuff here, and if you're interested in learning Elliott wave that uses a lot of Fibonacci, definitely recommend you check out my series on that. But first, get through all of the basics. All right, get through all of the basics, go through the entire playlist, make sure you watch everything. It's really interesting how this can be used in confluences for trading, even for setting stop losses, take profits, all that good stuff. So definitely do more research on this tool, and I'll link the video to further explain it in more detail down below. Alright, so a quick Q&A that I know a lot of people might have. This is from the old video as well, but I thought I should recycle it because these are very important questions. So the first one is, what are some of the challenges of understanding financial market structure? The financial market is a very dynamic market, and market structure can quickly change. This can make it challenging to keep up with the latest changes in market structure. Additionally, market structure can be affected by a variety of factors, including economic data, news events, and political developments. This can make it difficult to predict how market structure will change in the future. Next one is, do you recommend trading on news days? No, especially on red or orange folder days. But if you are fairly experienced or still want to trade, then wait at least 1 hour 30 minutes before or after wanting to place a trade. Here's a link where you can check on the news. Now, if you are someone that's trading ICT concepts, ICT teaches you how to trade on red folder days, but they are very specific days that he trades on. And I will also link a video down below to Sir Pickle's channel. Yes, that's the actual name of the channel. He also has a great video explaining on how to trade on these types of days. Very awesome content. I highly recommend you guys check them out. And when it comes to the Forex Factory calendar, this is a great, very basic calendar that you guys can check. I'll leave it down in the description below. This calendar gives you exactly the type of news that's going to come out for specific assets. And this can also apply if you're trading like stocks, right? You don't want to trade when certain news events are coming out because it can affect them, but you can do more research on that. And I also use, or have been using, a website called Fastpool. You can check that out in the description below. Fastpool is essentially Forex Factory, but on steroids. It's really cool. I highly recommend you guys check them out. I'll link them down in the description below. And lastly, do all assets move the same? No, all trading assets do not move the same. Some pairs are influenced by various factors, including economic indicators, geopolitical events, interest rates, market sentiment, how many big players are trading them, and much more. As a result, each currency pair can have its own unique characteristics and tendencies, but they all have their highs and lows, some bigger than others. Now guys, if you want, you can always download my presentations. I leave all my presentations in each video down in the description below, so you can keep them with you, make notes off of them, and don't forget to comment. Let me know if you have any more further questions that you guys need answered. I will gladly answer all of your questions if I have the time, or hit me up through the Discord. Again, the Discord's free. There's no paywall. Join, ask your questions. All right, I want to help you guys grow here. Awesome, so you guys finally made it to the end of this video. Thank you so much for sticking to it. Thank you for watching my content and giving it a shot. I really hope you guys learned from it. And before I go, I like to leave people with a little bit of biblical wisdom, as I am an Orthodox Christian. So here in Proverbs 3:5-6, I'm pretty sure we don't really read off of this translation as much, but I just do it because it's a little easier to read. Trust in the Lord with all your heart and lean not on your own understanding. In all your ways submit to him, and he will make your paths straight. Ladies and gents, I know you're probably a little concerned or a little worried that you might not make it through this trading journey, but I promise that if you stick to it, you work hard, you pay attention, you take notes, I promise you guys will make it at some point. Okay, at some point you guys will be profitable. You guys will finally have the lifestyle of your dreams. But please, whatever you do not forget to seek the Lord first. All right, seek him first, seek his wisdom, submit to his will, and I promise he will fix your path the way he needs it to be fixed or wants it to be fixed to better live your life. All right, at the end of the day, guys, you don't want to put your trust in money or people. Everybody will fail you at some point. Money will fail you at some point, but God won't. All right, and if you're interested in learning more about my religion or just the idea or topic of God in general, I have 2 playlists in the description down below. Check those playlists out. If you're a skeptic, you really need to check that playlist out. It's gonna help you guys a lot, tremendously. I promise you won't regret it. Just give it a shot. Aside from that, guys, that's all I have for you, and I will see you in the next one. Peace.